Okay, Monday, 23rd of October 2023, and we're going to have a look ahead at the calendar and a couple of items for the week. We're really going to be covering situation in Israel and Palestine here, and then we're going to have a look at oil and equities on the chart. So, getting into the calendar that we have, not much today or tomorrow really that we should be too worried about in terms of trading events. And then, we go into Wednesday, Thursday, Friday are going to be really good days for volatility here, guys. So, why is that? Well, we got Wednesday, new home sales, building permits, and then DOE. Christine Lagarde set to talk at 6 p.m. and Fed's Chair Powell at 9:30, 9:35. And then Thursday, we're getting into continuing jobless, core durable goods, core PCE, but the biggie, half one on Thursday, is the GDP out of the US, quarter on quarter coming out there. And then initial jobless claims also hitting at the same time. And then going through to the half three marker, you're going to get nat gas readings and Christine Lagarde speaking quarter past there, pending home sales as well, three. Quite a bit. And then Friday, it's the Fed's preferred measurement of inflation. It's the PCE price index year on year, set to come out 3.7, core set to come out, 3.4, core set to come out 3.7, the headline there at 3.4. And then you're going to get Barr speaking and Michigan Consumer, and that's really going to be it for the week. So the US Baker rig count also there at 6 bells every Friday, showing a pretty dour picture for the amount of rigs in production in the US at the moment, both gas and oil. So moving through, we're going to look at the oil chart in a second here, but you're really seeing this coming on the price in oil at the moment. Oil prices sliding as diplomatic efforts bear fruit in Gaza. And so we have seen, quite a bit of consolidation on Friday in the highs around 89s and 90s there. We just pulled up, I think a high on day was about 89, 85s. We're going to go over this chart here and have a look. Let's see what we can get. Here. So here's oil on the 30-minute bar chart, our favorite, right? And so you see just that 90 handle up here, right? And we just didn't get there, and we had a lot of plans for if and when we did, as we trade a lot of the spreads on the oil curve here as well, and just went sideways. Now we did get some nice positioning here, and we did come off on the front month, both towards the end of the session on Friday and then into that 86.92s down here, right? 86.92s, really decent level, which is derived from the daily bar charts above here. It's just really kind of a bit of a level there from it's actually the low of the week, or sorry, low of Wednesday, then the 13th of September. And just being a really nice level to trade against and come in, obviously, with supports there this morning. If we get up to P-Val and around 88.52s, I think we'll be sellers there to, go down, because seasonally oil does come off here. And the only thing to say that it won't come off here is if you get one of two things happening. You have Israel opening up a war front with Lebanon in the north, or going for a ground invasion of Lebanon. I don't think that's going to happen, because globally that it could bring into play first order consequence is going to be Hezbollah, obviously defending Lebanon. Then you're going to get Syria. Then you're going to get Iran. Maybe Turkey will come in. And if Iran come in, then Russia is really just a hop, skip, and a phone call away from getting involved there and probably sending the MiGs. Next thing you know, it's a Top Gun situation. And God, anyway. So I don't think that's going to happen, right? And you're seeing that getting priced in, that it's not going to happen. And the other obvious thing is that they haven't gone for the ground invasion into Gaza, okay? And so that's why oil is kind of coming off. We were talking about this just a couple of minutes ago in the group, talking about spreads here. And really, strategically, if they're probably being advised not to go into Gaza, because people talking about it being completely booby trapped, that it's a complete trap for them to go in there, like bombing tunnels where there are potentially Israeli hostages. Apparently, they don't give a shit about the hostages' lives anyway, the Israelis. So, it's just not looking like a probability. But the main thing we can wrap this all up in and say that, this is price negative for oil from these highs is that where is the real threat to supply right now? Even if they open up a battlefront in the north with Lebanon, or if they invade Gaza in the south, well, the west, southwest, what is the supply to oil? Well, there isn't actually an immediate one, and it would really be a fifth order consequence that there would be an oil supply shock. Do not forget that the US only has 17 days worth of oil in storage. Okay, so if it does happen, you're not going to get an immediate supply shock to oil. So that's why we're coming off, and I think we are going to break this 86.91's current low on day on oil, and we're going to um, probably break down 86s even to come back to probably 83.72s. Now, the only thing I think that will stop that from happening will be one of those two scenarios: the battlefront opening in the north or the ground invasion into Gaza. And then we'll be, back on the merry-go-round to the upside on oil. Key levels to look out for here on the upside if we do move up. P-Val today, 88.52s. We're looking to scale into shorts around there for a swing down to 86, probably 86 is even actually. On that, but we're spreading stuff as well here, guys. Where else? 89.76s. We could probably kind of move that up a little bit here, but no, we're going to keep it where it is because we have been trading against that, and it's such a resistance point there on Friday, I have to say. So, but then quite an interesting area, sort of balance area here at 86.12s. But to the upside, look, 92.75s has put the cap on pricing. Really, yeah, we've gotten above there, but we opened that week there at that price and then completely sold down from there. So that'll be the price for the market to get and stay above should the risk premium start to get bid back into this market. And then it's just a hop, skip, and a jump to 98.60s. 98.60s. I actually have to roll that level there, the 93.10. So that is now 93.10s to be aware of to the upside. Obviously, we have to get above 89.76s. And then it's just, the hop, skip, and a jump to 98.60s. And away we go to hit what will be 104. I think you got a lot of intersection up here with the downtrend. This is the Z23 contract here. So by the time we start to trade up here, this will be a different price. But this is the shape of the market I'm looking at in oil right now. Anyone wants further color on that, just give me a shout. Let's look across the world at NASDAQ here and equities as a broader asset class. Look, I think you got this excess low that we put in here on the NASDAQ on the 23rd of Jan 2022. That was a really nice little area for the market to get snared at. And, I think to the downside, we go 14,431 spot 75s. It's not that far to go for that on the NASDAQ right now. And if you ask me, it's going to be 14,186 before the bulls start to support this, right? That's it. That's it. 14,186. That's where I think we're going on this thing, right? So where would I sell it? Well, I would sell it actually from the 14,975s, but I don't think we're going to get that today. So look out for a little impulse pull back onto VWAP and then sell it down. That's NASDAQ for the Nazi traders, and here is the monthly bars. Sorry, these are monthly bars, weekly bars on the SPOOs. All right, look at what's happening here. Right, let me just kind of take everything off so we can have a clear look at this. All right, look at what's happening here. All right, you're seeing this trend here is breaking. All right, seeing it's breaking, and really destinations down here are going to be about 4,000, like 4093s, and I think lower. Okay, so look, we've got a lot of time before now and when the Santa rally might come in, and I think a good old sell off should be what we need here. People are always talking about the big one coming, the big wave of selling coming. We saw it in COVID. It wasn't that bad. It wasn't that bad. Buy the dip. The Fed are going to step in and print more money, you know? Um, so let's see. Obviously we'll talk about that if and when it happens, but these are the weekly bars on SPOOs. For some daily reference levels, what can we look at? Well, we're into open water here, to be honest, and I need that daily chart to finish updating. And just takes a bit of time because we got a lot of data, a lot of tick data loading there. Let's move to the Dow, where we're pretty much seeing the same thing going on. And why is it that we're coming off here on equities? We're about to come down to what was the low of the 2nd of November 22. It was kind of well defended there back in March this year. Yeah, this year. And then we lifted out. But generally, we're pretty flat on the last 2 years here in the Dow so far. So look, 38, 830, sorry, 32, 831s to trade on the downside. And then you might see some dip bars come in there, but I think we need to get a little bit more ugly than that. I actually really do think we need to get a bit more ugly than that on the Dow before we start to, think about buying dips and where there might be great value and et cetera, right? So, yeah, I think we're in a bear market. Honestly, I do. I think we're at the start of a bear market. Um, okay, the SPOOs just updated there now. Oh, about to. But then gold as well. Look, gold is a nasty, dirty trade. You just the big problem for all these markets here. We'll just get rid of the SPOOs for a second. I want to talk about the bonds. The big problem is the bonds. The bonds are going crazy. The yields are high, right? The yields are high. You're getting 5% on the 10-year. That's it. Last time we got that was 2007. Here we are. Here's the trend. We were looking at this. We sharked on this last week, meaning that we got near it but didn't trade it. And if that happens on a market, when it does trade that level, it's going to break down. And that's exactly what happened here on T notes. So listen, I've said it before and I'll reiterate. We're going for the 2010 high of 102.29 halves. 102.29 halves. On the pullback, that's the 2010 high. I don't think anything is going to change about that. I think, one trader who's really happy is Bill Ackman. Well done, Bill. You the man. So from where we are now, price is going to fall about 2.3% to get us there, 2.4%. And you're probably going to get 5.1 on the yield, maybe 5.2. Who knows? Who knows? But either which way, it's going to be a better yield at the risk-free rate than you're going to get by risking your biscuit in the NASDAQ or the SPOOs. So this is why people are really happy to put their money into treasuries at these yields and not risk it in the S&P. Plus, I was talking to like an equities investor yesterday, and they were saying, they don't know what to do. Maybe they're just going to go to cash. The markets are getting wrecked right now, and I don't see what the big positive factor is that's going to lift them out of it, other than the Fed come out and start to do QE, which means that they're going to ease back or they're going to cut. I don't think they're going to cut. They're talking about higher for longer. Okay, so they're not going to cut unless we have some sort of a crash scenario, in which case they will be motivated to cut by what the market is doing. Okay, so look, that's it. That's it for another week. Listen, best of luck, traders. Have a great one out there. Do give us a shout. Please do click to like and subscribe. Give us a comment as well. Let's hear from you. All right, have a good week. Talk to you then. Bye bye.